In a world where the economy seems like a roller coaster with ups and downs, everyone, including kids and adults, is thinking about how to keep their money safe and sound. Have you heard your parents discuss banking, savings, and investments? Well, it's time to understand these big words and even learn to use them to your advantage. Meet Robert Kiyosaki, a super smart man who knows a lot about money. He is not only a successful writer, but also a business genius and a wizard in investing money the right way. Picture him as a financial superhero, flying in to save the day with valuable tips on protecting your piggy bank from a big storm called economic uncertainty. In this unique video, we will take a fun and exciting journey into the world of money, guided by our financial superhero, Kiyosaki. He's got some secret tips and tricks up his sleeve to help us be richer. Yes, you heard it right, richer! And that too, in just a few years. Imagine having a magic shield that protects your money and helps it grow while others face challenging times. Sounds fantastic, right? Kiyosaki is here to help us create that shield. So please fasten your seatbelts as we dive into an adventure filled with golden wisdom from Kiyosaki's latest video, where he talks about how to build a solid financial fortress. Are you ready to become a young financial genius? Let's get started on this thrilling ride. The looming economic storm. Did you know we are currently living in a time that financial experts find quite concerning? Robert Kiyosaki, a well-known author and investor, has raised a red flag, warning us of a looming economic storm where money matters get tricky for everyone. Individuals, businesses, and even governments. He emphasizes that this could be the most significant turmoil ever since World War II's grand and globally affecting event. Kiyosaki quotes, "Difficult times bring out the best in you," encouraging us to stay informed and be prepared. Understanding the storm helps in navigating through it safely. Let's unfold what Kiyosaki suggests for bracing ourselves against the challenging times ahead and emerging as winners. But what is causing this storm? Well, Kiyosaki points towards several signs like rising prices and people finding it tough to manage their expenses. The root of all these signs is complex, but knowing it can be your shield. Let's delve deeper to understand the central role played by the Federal Reserve in this scenario. Before we dive deeper, though, into the stormy seas of the Federal Reserve's actions, please take a quick moment to anchor yourself to our channel. Like this video, subscribe, and ring that bell to ensure you're well equipped for the journey ahead. With us by your side, navigating these economic waves becomes a smoother voyage. The Federal Reserve's role. The Federal Reserve, also known as the Fed, is like the ship's captain steering the country's economic policies. It has a substantial role in deciding the direction of the nation's money matters. Recently, the Fed increased something called the interest rate by a small fraction, 25 basis points to be exact, making borrowing money a bit more expensive than before. This change has caused a ripple effect, affecting the housing market, the stock market, and the general financial well-being of the country. Kiyosaki draws our attention to this critical move and helps us understand its potential impact. According to him, increasing the interest rates can lead to a decrease in the value of stocks, bonds, real estate investments, and even affect the power of the US dollar in the global market. To quote Kiyosaki, "The Fed's moves are like a giant wave in the ocean, affecting every ship sailing, big and small." But it's not all doom and gloom. Kiyosaki believes in being prepared and using knowledge as a tool to navigate these choppy waters. He suggests understanding the Fed's moves can help us make intelligent decisions, like choosing suitable investments and saving options to secure our financial future. He even hints at a massive disturbance in a complex financial playground called the derivatives market, which involves enormous amounts of money, predicting a shakeup worth $1 quadrillion. It sounds like a lot, and it indeed is. So Kiyosaki insists on being cautious and informed to navigate these financially turbulent times safely. Kiyosaki's critique of the Fed. You may wonder, is everyone in agreement with the big decisions the Federal Reserve is making? Robert Kiyosaki certainly has some strong opinions about it, and they do not favor the Fed. Kiyosaki believes that the Federal Reserve isn't being entirely honest about the effects of the recent changes in interest rates on the increase in prices of goods and services, which is what we call inflation. He is worried that the average person, like you and your family, might not be the priority for the Fed. Instead, they seem to be focusing more on protecting the big banks. He shares a powerful quote, reminding us it's not about how much money you make, but how much money you keep. He urges families to understand that some policies might have them paying more in the long run. And guess what? Kiyosaki doesn't stop at critiquing the Fed. He extends his criticism to the president, Joe Biden. The president has said that rescuing the big banks that are not doing well will not cost the common people any money. But Kiyosaki shakes his head in disagreement. He thinks the funds used for rescuing these banks could come from the pockets of regular taxpayers, like your parents, meaning the general public might bear the brunt of these financial decisions. He emphasizes the importance of being financially literate during these times. Kiyosaki encourages young learners to start understanding economic nuances, indicating that being knowledgeable can be our best defense in uncertain times. Understanding Kiyosaki's critique of the Fed gives us a peek into the complex world of financial decision-making. It encourages us to think critically about the information presented to us and to always strive for financial education to secure our futures. The Inflation Conundrum. In the world of money, things can sometimes feel like a giant balloon that keeps growing bigger and bigger. This is called inflation, a word that means the prices of things that we buy, from chocolate bars to bicycles, keep going up. Lately, the news has been saying that this balloon is growing a bit slower, giving some people a sigh of relief. But Robert Kiyosaki is scratching his head in worry. He warns us not to relax just yet, because he believes the balloon of prices might start growing faster again, especially with the recent troubles in big banks like Silicon Valley Bank and Signature Bank. These banks closing down are like warning alarms, hinting that a significant financial storm might be coming. It's as if these events are little cracks in a dam, and Kiyosaki fears that more and more cracks might appear, leading to a flood of problems in the financial world. To prevent this from happening, many experts and Kiyosaki are urging the Federal Reserve, the organization that works like the captain of the ship steering the financial sea, to be careful about making decisions that might make the prices balloon grow too fast and too big. They say, hold on, don't make it harder for other banks by increasing the interest rates now. By understanding this inflation conundrum, you can imagine the delicate balancing act the Fed must do to keep the financial ship steady without letting the balloon of prices burst and becoming too enormous to handle. Like in a circus, it's all about keeping the balance to ensure the show goes on without hiccups. For us, it means keeping an eye on the news, learning more about these big words and ideas, and discussing them with our family and friends to understand better what is happening in the world of money and how we can be prepared for the future. Market reactions. Imagine being on a roller coaster, where sometimes you go up and sometimes you plummet down, giving you butterflies in your stomach. The stock market is like this roller coaster. Following the Fed's recent decisions, we saw the Dow Jones, NASDAQ, and the S&P 500, big names in the stock market, experience some drops, like a roller coaster going down a steep track. Robert Kiyosaki wants us to understand that these big moves in the market are primarily influenced by the decisions made by the Federal Reserve, the group of people steering the ship of our country's economy. It's essential to know this because many people's savings are tied to the stock market, and the ups and downs can affect the money they have saved. Effects on personal finance. Now, you might be wondering, how does all this talk about big markets and interest rates affect me? Robert Kiyosaki explains that these significant economic events can have a domino effect, reaching down to your piggy bank and future plans. Let's break it down. Savings and investments. Just as plants grow faster in the spring, your savings account and certificates of deposits, CDs, might grow faster with higher interest rates. It's a chance for the money you saved to grow a bit more. Mortgages. If your family is considering buying a new home, now might be the time to secure a reasonable loan rate. But remember, it's like catching a butterfly. The rates change frequently, so it's about finding the right time to acquire the best rate. Housing market. Higher interest rates means that loans for buying homes can become more expensive, like when the price of your favorite candy bar goes up. This might make fewer people want to buy houses because they prefer to wait until the candy is cheaper. Impact on bonds and stocks. This part resembles a seesaw. When interest rates go up, the bond market goes down, and some investors move their money from stocks to bonds. It creates a lot of changes in the playground of investments. Credit card debt. For adults, using credit cards can become more expensive as interest rates go up because they will have to pay more money back to the credit card companies over time. It's like borrowing a bigger candy bar and having to return even more candy later. Kiyosaki's recommendations. Imagine being a wise and brave knight, setting up defenses for your castle before a big storm arrives. Robert Kiyosaki advises us to do something similar with our money to protect it from the upcoming economic storm. Here are his top tips to build a robust financial fortress. Short-term bonds. Think of short-term bonds as your fortress's protective wall. If you have dreams and goals for the next 5 to 10 years, consider building this wall with short-term bonds. They are safer than long-term bonds because you get your investment back quicker, helping guard your dreams from the high waves of economic uncertainty. Finance your residence. If your family plans to buy a home, Kiyosaki suggests locking in the current mortgage rate, like securing the castle gates before rates increase. This wise move can save your family a lot of money in the long run. Pay off debt. Owing money can be like having a leak in your castle's roof, slowly letting in water or debt over time. To stop this, it's better to repair the roof by paying off debts now, especially those with high interest rates, before they grow bigger and cause more trouble. Invest in inflation hedge assets. Imagine if you had a magical shield that could protect your treasure from losing its value during tough times. Kiyosaki says that gold and silver can be that shield. Rather than keeping all your money in a bank where its value might decrease during an economic crisis, investing in these precious metals can help you maintain your treasure's worth. In the turbulent sea of today's economy, guidance from experienced navigators like Robert Kiyosaki can be a beacon of light, helping us to steer towards safer waters. Kiyosaki urges us to be astute with our finances, finding sanctuary in assets that hold steadfast in rocky economic times. His counsel to wisely manage mortgages and clear high-interest debts offers a roadmap to financial resilience, fostering rich discussions about economic stability in complex times. As we end this explorative journey with Kiyosaki, we hope you feel better equipped to face the financial future with a fortified strategy. To stay updated with more expert advice, be sure to like this article, subscribe to our channel, hit the notification bell, and share this video with others on the path to financial security.